All right. Hello, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our weekly options recap. What I want to do here with today's video, as we normally do, take a look at the market big picture, start out with the daily charts, show you where we're sitting at here at some key levels this week, how that impacts trading next week, and then I'll also walk you through some trades that are on our radar for next week, how we plan on taking advantage of this market. As always, if you have any questions at any point during today's session, feel free to type those in. I'm more than willing to address those as they come in. If you're watching the recording, you can always post a comment there inside of YouTube or on the blog, and we can certainly get in touch that way as well. So let's go ahead and jump in. We've got this window here between now and Christmas. We've got a couple of weeks here for the market to stay decently active. Once you start to get closer to Christmas and New Year's, volume in all likelihood will drop off of a cliff. We've already started to see volume contract here over the past few weeks, and that will just continue as we get into the holiday stretch. We've got a window now where I think we can get some good movement. Markets are incredibly overbought. Even though we're off of the highs this week, we have seen some selling. I'm going to walk you through why it's a little concerning with the way it's all played out here this week. When you take a look at SPY on the daily chart, you can see the massive run to the upside that we have had. We made the new all-time high earlier in the week up at 371.05. That is our new reference point on the upside. It's an area of resistance that we will be tracking going into next week. If we do get another rally back higher next week, that's going to be our area that we'll want to watch. Above that, our focus shifts to 371.50, 372. Because this is an all-time high, as we break that level, should it break next week, there's no previous moves to reference. So our focus shifts to the big 0.50 and 0.00 levels. On the downside, we have broken through some key support levels. Let me zoom in so it's a little bit easier to see. The first one was yesterday afternoon. It was the 8-period exponential moving average. It's that solid pink line. We've been tracking that here in these videos for the last number of weeks. We've mentioned that just should that level break on an intraday basis, it's good to see, but that's not enough. I want to see a close below that level. Well, we barely got a close below that level yesterday. We essentially closed right on top of it. We then saw some further selling earlier in the session today. Markets are well off of the lows. The low of the session today on SPY 363.26. So, we're already at $2.50 off of the low today. And the low came right on top of the 20-period moving averages. Those are the solid and dotted green lines there. Okay, the 20 SMA and EMA, very solid areas of support. We have not tested those levels since early November. Today was the first test, and obviously the bulls defended that level immediately. We're well off of the lows. I think some of that is, number one, the dip has been bought here every single time for months. But then also going into the weekend, everybody that has wanted to give this market a shot on the downside doesn't want to hold over the weekend. What if we get a headline to hit, right? What if we get some more stimulus news and all of a sudden the market rockets back to the upside? No one wants to hold short here, essentially, overnight. Everybody is willing to give it a shot on the downside intraday, but going into the close, just no one's willing to do that. Now, is today any different? We'll have to wait and see what happens during the last hour of the session here today. But the volume down at the bottom, the 50-day average for volume on SPY is sitting around just over 71 million shares. We have not been able to hit that level, maybe but one or two exceptions over the past few weeks. The volume's been very, very light. This is very typical of a late stage move. There's so many markets that are overdone here on the upside. It does not mean we can't move higher, but when you start to see new highs made on internals that are lackluster, volumes that's lackluster, it's important to take note of that. That could very well lead to a shift change here, or a change in direction, if you will, over the next couple of weeks. Historically, the second half of December is a strong time of the year, because volume does start to contract. And when that happens, markets favor the upside. But going into the end of this year, yes, there's some wild cards there with the stimulus and all the unknowns with the pandemic. But there's so much good news that's already been priced in. This market has basically ignored all bad news here now for months. So I get this question a lot. I get it on a daily basis right now. Mike, do we want to fight the Fed? Do I want to fight central banks just trying to prop this market up? if we're going to get more good news out with a stimulus plan or with, more vaccine approval over the next week or so, do we want to fight that? You've got to ask yourself, how much of that is already priced in? I mean, going back to late October, early November, we have seen SPY go from around 322-ish up to 371. Okay, that's $50. That's 50 points on the upside of good news that's already been priced in. So again, I'm not saying the market can't head higher from here, but when you start to see these types of overbought conditions, I think you have to respect that. I think you have to be cautious on the upside. As I've said here recently, if you're already in bullish positions, that's fine. It's a difficult place to initiate new bullish trades here now on a swing trading basis. It's difficult because we're so extended. If you want to play some day trades, that's one thing, but on a swing trading basis where you're looking to hold from 3 to 20 days, I think it's difficult here to initiate new long trades. You don't have the risk reward in your favor at these levels. I would love to see a pullback first. Doesn't have to be a complete meltdown on the downside, but a healthy pullback, continuing into next week. I think that would set us up better for another push to the upside going into the end of the year. So I think next week is going to be crucial, whether we're able to break the 20 period SMA and EMA, those green lines right here. We can break those on the downside. We could very well see a quick pop lower. I think my concern here so far is, on the selling, even on that move yesterday, did we break a key support level? We did, but it was still a green candle. We still closed off of the lows. It's difficult now to get anything going on the downside because every dip has been bought. And then if you take a look at the internals, even today, it looked pretty nasty here earlier in the session. But when you take a look at these internals, they're not all that bad, especially on the NASDAQ. The volume ratio on the New York Stock Exchange, that minus 2.85 to 1, that's a decent number. It's only at minus 1.07 to 1 on the NASDAQ. There is more volume on the downside, but it's not overwhelmingly so. What I want to see on a game changer of a session, we would love to see that number at minus 3, 4, 5 to 1, where you just start to get a run to the exit. We have not seen that so far today. The advanced decline line. The advanced decline line on the NASDAQ, minus 870. This is not across the board selling. That's the problem. When you have Amazon up, you've got Google up, you've got some pockets of strength in here that are preventing that move to the downside. As I've talked about recently, if we're going to get this change in direction, if we're going to get some follow through on the downside, we need to see every sector, every name participate. We just haven't had that yet. We continue to see just enough strength in certain sectors to prevent any damage from being done. On the tick, we haven't had any extreme. Actually, we had one minus 1,000 tick reading earlier in the session, but really no strong sell programs, which is unusual. When you start to see overbought markets turn to the downside, in a lot of cases, you will start to see those minus 1,000 tick readings. Those indicate sell programs kicking in. And we really, other than one case earlier in the session, we really have not had any type of nasty sell program from kicking in. And you can see on the 5-minute chart, we got to right around lunchtime, around 12:30-ish or so. We were down near the lows of the session. We reversed immediately off of that level. We've basically been grinding our way back to the upside here since then. And now the market just rallying back. Is that the high of the session? No. So, we're seeing a really nice push here. So this afternoon will be crucial going into the close. Here this afternoon, going to be very, very important to see whether we're able to get another push to the downside into the close, or if we close up near the highs of the session, we could just very well make new all-time highs here early next week. So that's why this afternoon and then early next week is going to be very, very important for direction here going into the end of the year. Let's go over and shift our focus from the daily chart to the 195-minute chart. This is the chart that I actually base my trading decisions off of. This is the chart that I use for entry and exit points. The daily chart and everything we've talked about so far is just there to help guide overall market sentiment. And that helps guide me on what types of options trades I'm taking. Am I using more vertical spreads? Am I using more long calls, long puts? Am I using normal position size, or am I cutting back? Am I using more weekly options or monthly options? All of those decisions for me are based off of what I'm seeing on the market big picture, as well as the internals. Now, when we narrow it down to the 195-minute chart, this is a little bit more reactive of a chart, helps me determine my entry and exit points. And we've been talking about how this chart for the last number of weeks, really going back into October, this chart has been very, very bullish. And we mentioned you want to be cautiously bullish because, I mean, the price up until this week, price has been rock solid on the upside, right? This week, we did start to see a change here because we did break below the 8-period EMA. That is the red and blue line there up at the top. That level broke. Doesn't mean I just immediately jump into a short trade. I need to see a couple other things happen. First of all, down on our trend strength histogram down at the bottom, it's that red and blue histogram down here. It briefly here this week turned red for one candle. So we had bearish momentum starting to take over here earlier in the session. It didn't last long, right? And markets have popped right back up. And as we just mentioned, we're well off of the lows of the session. I have a short entry point here going into next week. If we do get a lower close this afternoon and a lower open early next week, my entry point is the series of blue plus signs here. Let me zoom in so it's easier for you to see. These two plus signs indicate a short entry point trigger setting up for us at 363.05. That is a level where I would be interested in putting on a short trade for a near-term move lower. And the reason I stress that, a lot of times people hear me talk about that and they're saying, you're buying puts here on SPY? Does that mean you're expecting a crash? That's not it at all. When I say I'm looking to put on a new bearish position, I'm talking about for the next 3 to 20 days. That's a typical swing trade for us. Okay, on SPY, a lot can happen in the next 3 to 7 days. Could we see a pullback before another wave to the upside? Sure. So that's what I would be looking to take advantage of if we get price action to get down and touch those blue plus signs. But we're just continuing to plow our way higher here as we speak, continuing to move off of the lows. So nothing there to do yet, but it's on my radar for next week. If we hit that blue plus sign, I would be taking a look at some long puts. If we jump over to the Thinkorswim platform, let's talk briefly about what that would look like and what expiration cycles we would use. I have been using a mix of weekly and monthly options here over the past couple of weeks. If it's a credit spread, meaning if I'm trying to sell a vertical spread to open up a position, I'm open to utilizing some shorter term weekly options. Reason being, when you sell a credit spread, we're putting the time decay in our favor. I'd be willing to take that approach. If it's a long option, if I'm buying a call or a put, or if I'm buying a debit spread, I have been starting to transition out into January, the January monthly cycle with 35 days left. Going out a little bit further in time, that way we can limit the time decay that's there. Even though we're going to pay more for those options going out 35 days, it's going to give us a higher quality position. Now, let's say we do hit that entry point. And again, the entry point is at 363.05. If we hit 363.05, I want to get slightly in the money. At that point, I wouldn't be looking at the 365 puts. It would get me a couple strikes in the money from my entry point on my chart. We have plenty of liquidity here, meaning we have high volume, high open interest. You shouldn't have any problem getting filled on a long put. Fully realize that that put option is not in the money right now, but we haven't hit the entry point yet. By the time we hit the entry point at 363, that would have me looking at the 365 put. So that's on my radar. Again, with what the market's doing here midday, or as we go into the afternoon, I'm not expecting this trade to trigger in. There's a higher likelihood of it happening early next week, potentially on Monday. All right. So that is definitely on my radar. While we're on SPY, let me just give you a quick update on our overnight pop trade that we took yesterday afternoon into this morning. We actually sold a put spread. The whole idea there is we had some selling. We had some selling early in the session yesterday, and then we bounced off of the lows. We saw some potential there for more headlines with a potential stimulus plan. So we decided to come in and put on a neutral to bullish position going into expiration day, going into the options that expire this afternoon. And what we did is we sold the 366, 364 put spread, meaning I was selling the 366 put and I was buying the 364 put at the same time. We put this trade on yesterday afternoon. We collected 50 cents or $50 per spread. We actually closed it out here earlier in the session as markets were down, selling off late morning. We actually closed it out. I took I'm trying to check my numbers here just to get you an accurate number. I took a $29 loss per spread on the trade. I closed it out for 79 cents. Obviously, you can see here that had I held, it'd be into a profit at this point. So why didn't I hold? Had a couple of questions on that. When you get this close to expiration, the gamma is significant. The gamma tells you how quickly the options are going to react to changes in stock price. When you get this close to an expiration, things happen very quickly. Earlier in the session, we had a bounce off of the lows. Let me show you here. On this first bounce to the upside right here, we saw that spread recover. We were heading back right around our entry point, and then we saw this happen. We saw it roll back over, and we saw that selling kick in. So instead of taking the risk there of potentially having a full loss, we took a partial loss, knowing that in this market anything can happen, right? I'd rather take the small loss, try to limit the damage as much as we possibly can, and free up the capital for the next trade. Obviously, you can see what's happened here. I mean, over the past 2 hours or so, this has been a significant rally. Had we held, it would have turned into a partial profit. You have to be careful with that. I'm not saying you should never do it. There's times I will hold into the afternoon. You just want to be careful because a partial loss can turn into a full loss very quickly. You have to be comfortable with that approach. For me, just given the overall environment that we've been in, knowing the market is so overbought here in the near term, I was expecting that continuation to the downside. So I ended up taking the partial loss, and freeing up the capital, also freeing up the rest of my day so I don't have to watch it as closely the rest of the day. So that's how I managed the overnight pop trade here today. So I did talk to a couple of you that decided to hold, which is fine. Have no issue there as long as you're comfortable with the additional risk. And at this point, it would be a small profit at that point. I do not have the position on it, however. Cheyenne, I have a problem with Forex. I don't know where the market's going. So I'm not a Forex trader at all, unfortunately. So I'm not going to be the best resource there to give you an opinion on the currency markets. I'm not saying you shouldn't trade Forex. It's just in my experience, I personally believe the Forex markets are the most difficult to make money in long term. So I just personally don't trade them. We do have people here at NetPicks. We have people on staff that trade Forex. So you can certainly do it. It's just, it can be a challenge. It can be a grind. So if you want more help on the Forex side, you can feel free to send us an email, info@netpicks.com. If you want to send us an email, I'm more than willing to put you in touch with our Forex expert, Adnan, who is a great resource. He can certainly help out with any Forex questions you might have there. NS, little bit about your setup. Okay, so let me go back over to the chart here. Let's talk about that in more detail. I started to touch on it. So NS, I prefer to use a mix of the 195-minute chart. And then if I zoom out here, let me show the other chart. I will use the 130-minute chart as well. Those are my two preferred time frames. I do spend most of my time on the 195-minute chart. Let's talk about the indicators up top first. The red and blue line there, that is the 8-period exponential moving average. The white and yellow line is the 50-period exponential moving average. We just have color coded them. So if that moving average is trending higher, if the 8 EMA is trending higher, it's going to plot blue. If it's trending lower, it'll plot red. And then on the 50 EMA, if it's moving up, if it's trending up, it'll plot yellow. If it's trending down, it'll plot white. So nothing changes as far as what goes into the calculation of the moving average. It's just we've done some color coding there. Down below, let me get your comment out of the way so we can see it. So we got two histograms down at the bottom. The red and blue histogram that we've already talked about is a trend strength histogram. It will give us a read on bullish or bearish momentum taking over in the market. The last month plus, we have been in a very strong uptrend, and you can see that on the trend strength histogram. When it plots blue, it's in a bullish mode. We briefly here today saw it flip red, didn't last very long. If that continues next week, that red trend strength histogram reading indicates bearish momentum taking over. The red, yellow, and green histogram in the middle of your screen is what we call our pulse indicator. That is the one that takes a look at overbought and oversold conditions. If it plots yellow, like it did back end of October, early November, that indicates an oversold condition on the downside. If we see the yellow bars on the downside, it's oversold, meaning price is between a 1 and a 2 standard deviation move on the downside. Doesn't mean price can't move lower. It just means it's overdone, and it'll typically lead to either a period of consolidation or a reversal in the other direction. If it plots green, which it did here for one candle, that indicates price being between a 2 and a 3 standard deviation move. It's even more oversold at that point. It can plot both yellow on the downside. It'll also plot yellow on the upside if we're overbought. All right, so it will continue to identify those extremes for us. And we will use the pulse indicator in a lot of cases to identify our credit spread opportunities. And then, NS, you were asking about the purple line. I don't have a purple line. I have the purple dots on the chart, and those indicate a trailing stop. So if we're in a position, it would continue to create a stop level that's updated for me every day. It starts to trail that stop for us and ideally locking in profit as quickly as possible. So hopefully that helps there. All right, let's take a look next at QQQ. We talked about the potential for a short trade on SPY, which is not triggered in. Let's talk about the NASDAQ ETF next. It also, very similar to SPY, it is also setting up a new short trade. The reason for that setup, over on the right-hand side, you'll see the blue dots. The reason that setup is there is the trend strength histogram down at the bottom has flipped from blue to red, indicating bearish momentum taking over. We have not hit the entry point yet. I have to wait and see 298.22. That's where the blue dot or the blue plus signs there. That would be my short entry point. If that level is hit, that would be a point that I would be interested in potentially putting on a bearish trade with some long puts. If I jump over to the trade page, again, I'm going to stick with the January monthly options here. And once the entry point is hit at 298.22, I want to get slightly in the money. Just like we talked about on SPY, I don't mind that they're more expensive. It's a higher quality position by going with the in the money options. So I'd be taking a look at the 300 puts. They have plenty of volume, plenty of open interest. So if that trade does trigger in, if we hit 298.22 next week, I would be taking a look at the 300 puts out in January. Another trade on our radar for early next week. If that trade does trigger in, our stop would be up at 303.27. You can see my pink dots up top. So it's important, it's tempting to want to say, hey, we've got a short trade there. Let's just go ahead and jump in now. We haven't hit the entry point yet. This trade could very well cancel. If that trend strength histogram flips back up blue, if it flips positive again, that would cancel the setup. So I have to be patient. I have to wait for that trade to trigger in. We have not hit the entry yet. So there's nothing for us to do there. IWM, the Russell ETF, the Russell 2000 ETF. It has just been on an absolute tear lately. Over the last couple of weeks, the Russell has been this strong name out of the bunch as far as the index products go. No doubt about it. We are overbought. We did get a yellow bar on the pulse indicator earlier this week, indicating price between a 1 and a 2 standard deviation move on the upside. We're overbought. This has us looking for a potential reversal in the near term. I'm not interested in buying a long put here because my trend strength histogram has not flipped over the 0 line yet. So I'm not interested in long puts. However, if I jump back over to the trade page, I would be interested in selling an out of the money call spread. Selling an out of the money call spread is a way for me to put on a neutral to bearish position. Now, because I'm selling a spread, I could go to some of the weeklies. I could take a look at the December 31st options there with the ones with 20 days left. I would go out and take a look at the 194 call. It's an out of the money call. I'm going to right click on it, go to sell and go to vertical. It's going to pop up an order down at the bottom where I would be selling the 194 call. And then I'm going to buy the 196 call at the same time, just to make sure I'm in a risk-defined trade. The goal here is to collect between 30 and 40% of the width of the strikes. There's a $2 difference between my strikes here. So if I can collect between 60 and 80 cents, that would meet my criteria. The current price of this spread is 71 cents. If If I click on confirm and send, if I put this trade on now, I'd be collecting $71 per spread. I would be risking $129 per spread. Okay. I'm going to typically be in that risk two, right around risk two to make one in most cases with a credit spread. I'm okay with that because I've got 5 ways of making money on this position. I make money if IWM moves up, down, or sideways. As long as the price stays below 194.71, I'm okay. I make money from time decay adding up, and I make money from volatility decreasing. So there's my 5 ways of making money on the position. It doesn't have the home run profit potential of a long call or long put. However, in exchange, I have a much higher winning percentage. So that is definitely a trade on my radar for next week. Definitely expecting a pullback or at least a pause, at least some sideways consolidation out of the Russell going into next week. And this is one way of playing that type of an outlook. Let's take a look at the financials. XLF, which is the financial ETF. It is setting up a short trade for us going into next week. It's there. The blue plus sign there indicates my short entry point. It's there because my trend strength histogram flipped from blue to red, indicating bearish momentum taking over, but we have not hit the entry point yet. I do need to wait for price to get down to 28.20. That's the price of that blue plus sign. So it's on my radar for early next week, but I have to wait for price action to confirm. And so far, as we've talked about already, I mean, markets have tried to rally off of the lows today. So we have not seen a lot of these trades trigger in as of yet. When we go over to some of the individual financial stocks, Citigroup, Bank of America, if we take a look at Citigroup, it has been super strong, really going back into early November, been rock solid. I mean, this is a super strong uptrend that's been in place. Trend strength histogram still blue, so we do not have any type of a long put opportunity there. However, the pulse indicator up top is solidly yellow, and it's been so for the last few weeks. That indicates price being between a 1 and a 2 standard deviation move on the upside. We're overbought. It does give us the green light to sell an out of the money call credit spread, just like we talked about over on IWM. So that one is also on my radar going into next week. Bank of America. If we take a look at Bank of America, it is setting up a new short setup. Again, just like some of these others that we've taken a look at, it's setting up for us, but there's no trigger yet. It's set up for us because the trend strength indicator went from blue to red. We just don't have the entry point being touched yet. The entry point is at 28.26. So this is another one. It's definitely on the list for early next week, but I have to wait for that entry point to be hit first. XLE, let's take a look at the energy ETF. It's also been on an absolute tear. And I know I've been saying that a lot. I mean, it's been the case in many sectors. I mean, everything has participated on the upside here of late. Everything is overbought in the near term. How do I quantify that? Well, if you take a look at XLE, the pulse indicator, again, the last couple of weeks, been yellow the whole time. We're overbought. Prices between a 1 and a 2 standard deviation move on the upside. I'm interested in selling an out of the money call credit spread going into next week. Definitely on my radar. So we'll just have to wait and see. Can we get a push to the downside? One filter that you can use before just jumping in and selling a call spread here. You could wait for price to close below the 8 EMA. That's again, that red and blue line. If we can get price to close below that level, that would be more confirmation that a near-term top is in place and we could potentially see a pullback. So that's another one on the radar for next week. Tesla. Everybody's favorite stock at the moment. I mean, it's just been ultra active for sure. It's trading like a penny stock. As crazy as that sounds, because it's a $650 stock, it's been all over the map. I mean, we're just with a huge push to the upside here since middle of November. We are overbought. Again, yellow pulse bars down at the bottom. Price actually has moved below the 8 EMA. So this one is actually on the list for a call credit spread. And let's go ahead and switch the symbol here. I'll walk you through the trade that I was looking at earlier. I was looking at doing this with the December 24 weekly cycle. So I'll wait for those options to pop up. Those are the options with 13 days left to expiration. We were taking a look at selling the 650 655 call spread. So I went down to the 650 call, went to sell, and went to vertical. So I was looking at this one earlier, and all it means is I'm selling the 650 call and I'm buying the 655 call at the same time. It's currently trading for around $1.70 or so. If we collect $1.70, it would be $170 that we'd be collecting per spread. We'd be risking $330 per spread, right around risk 2 to make 1. And it's a way for me to put on a position on Tesla for a fraction of the capital. We're tying up $330 per spread. If you come in and try to buy a long put on Tesla, you're talking about between $5,000 and $10,000 a contract. They're very expensive. This is a way that you can stay active even with a small account size. You're risking $330 in this case. That's the most you can lose on the position if you're dead wrong. You would lose money if the stock went above 650, 170. It's currently trading right around 611 or so. So you've got about a $40 cushion that this thing could move against you and still make money. The only move that hurts you is a big move above 650, 170, which we're not expecting because the market's already overbought. And we also make money if time decay adds up, which it will, and if volatility decreases. So now we got 5 ways of making money on the position. Tesla, very much on my radar. And this is another one that I've had a lot of questions on this week, because you take a look at the chart, you've got the Tesla going into the S&P here. Is it next week? The week after? Can't remember the exact date, but it's going to be added to the S&P 500. So wouldn't that be a bullish news event? Well, it's already been announced, and Tesla's already rallied up here a couple hundred points off of that news. There's already been an incredible amount of good news already priced in here. I'm not saying Tesla can't move higher. It's showing signs of being tired. It's in store for a well-deserved pause. So definitely looking at a potential credit spread opportunity on Tesla going into next week. Jeffrey asking, can I do the sectors XLK, XLP, XLC, and XLY? Yeah, we can take a look at those here. XLK, which is the technology ETF. Apologize, it's taken a while there to load up. So a couple things to keep in mind here. You've got this tech ETF. I love to use it because it's a cheaper way. It's heavily influenced by some of those big tech stocks like Amazon, like Apple. So it's just a cheaper way to be active in the tech sector. It is overbought. We have seen price start to move lower. We have had our trend strength histogram go from blue to red. So we do have a short trade setting up here. Entry point at 122.80. Couple things that I want to point out here. That yellow line is sitting right on top of the entry point. That is the 50-period EMA. I would ask for it to break the 50 EMA before putting on a bearish position. If we start to go back and look, that 50 EMA can be a rock solid area of support and resistance. I would ask it to break that level first before jumping in anything on the downside. If you're looking at a long put, I like it if we can get below the 50 EMA. So again, that level is currently sitting at 122.66 is the 50 EMA. I'd wait for that level to break before getting bearish. And if it bounces off of that level, if we find support here and move back to the upside, I'd be looking at a potential long call. If my trend strength histogram goes from red to blue, I'd need to see bullish momentum taking back over there. XLP, consumer staples. So not much going on here as far as new trade opportunities go. It's been in a bullish trade, at least on our charts, since early November. Like I said earlier, I'm not really interested in initiating new long trades here. I'd wait for a deeper pullback first. I don't have any short opportunities here because my trend strength histogram hasn't flipped red. So, Jeffrey, if you're already in an XLP trade, I wouldn't have a problem holding it. If it starts to break the 50 EMA, I would consider closing out of positions at that point. And if you don't have a trade on, I'd hold off. I'm not necessarily interested in anything new here at the moment on XLP. XLC, not one that I personally trade. So I've got to actually load up the data here. Yeah, it's not loading up the data. So I'll come back to that one. Let's go to XLY. I do trade XLY, the consumer discretionary ETF. It is going to be influenced by Amazon. We're finding support right on top of the 50 EMA. If that level breaks, we do have a short entry point sitting there at 155.12. That is definitely on the radar for next week. We have to break that 50 EMA first. If it does break, I would be interested in adding some long puts there. If this level holds as support and we bounce right back to the upside next week, if the trend strength histogram goes from red to blue, we'd be taking a look at a new long call opportunity there. So we're just in a holding pattern for the moment, watching that 50 EMA closely. And then let me see if I can get XLC. Let's see if it'll load up the data for me. There it is. So XLC going to be very similar to XLP. Am I interested in any new positions here at this point? No. If you're already in a long position, that's fine. I don't have a problem holding. You could potentially, ramp up a stop around the 50 EMA. If that level's broken, if you're in a long setup, I think that's where you have to, consider going flat, booking some profit at that point. But at this point, for new trades, I wouldn't do anything. I would be in a holding pattern there. Yeah, if you're long, Jeffrey, again, I don't have a problem holding. With what we've seen the last couple of days, are there some warning signals out there? Yes, absolutely. I mean, we've seen some signs of some tired markets here. Not knowing where your entry point is at, you can never argue taking a profit, right? It's never a bad thing to ring the register. What you don't want to do is let it pull back far enough to where you're giving back all that profit. So if you start to break some of these support levels, specifically the 50 EMA on the 195-minute chart, I would consider, if it were me, I would consider taking the trades off at that point. All right, a couple more to take a look at before we wrap up for the week. Microsoft. It's tried to break down a couple times this week. We saw some signs of some weakness, and we just kind of been stuck inside of this channel here. This pattern has been stuck right between 217 and then on the downside right around 208 or so, 210-ish. That channel has held. We haven't been able to break out of that. If we can break that channel, I think there's a very decent size move coming for Microsoft. I already have a bearish position on. I'm in some long puts, so ideally I'd like to see this thing break lower. I got short there. I got into a long put position at 212.96. So we're looking for this thing to reverse back to the downside going into next week. So bottom line is next week, very important week for many of these markets. Can we just continue this never-ending move higher? Or are we in for a well-deserved break? We've seen some signs of selling this week, but again, support levels have been defended. We have not seen any type of significant selling. So nothing really to do there in an aggressive way on the downside as of yet. If you want to lean a little bit bearish, which I certainly want to right now, I've been using more call credit spreads to lean a little bit bearish with more of a neutral kicker there, just in case we get a sideways move instead of a push to the downside. So we'll track things very closely here going into next week. I will jump back on next week on Wednesday for our midweek update. So we'd love to have you join us at that point on Wednesday. If you have any questions between now and then, feel free to send me an email, mike@netpicks.com, or you can post a question here on the video or inside of YouTube or Facebook. Otherwise, I'm going to start to wrap up here for the day and for the week. Enjoy your weekend, everybody. And I look forward to seeing you guys all back here on Wednesday next week. We'll talk to you then.